All right, good morning, morning. Welcome, everybody. It is Friday the 24th, the last Friday of February. So we know this time next week will be a non-farm payroll month or Friday. Some interesting news in the last 24 hours. The core PCE number was smoking hot. But starting off with yesterday, we had been talking about crude oil, and guess what? Another big surplus. Uh, kind of crazy. They're kind of missing this one. I don't know where the forecast. I mean, I guess it's not as bad as a 16.3, but 7.6. Yeah, not a little number. Yeah, coffee's ready, but I only got half left. So it's gonna be one of those Fridays. Yeah, I was up early again today. Kip had me up early. He managed to sleep through, so we didn't do our standard like 12 o'clock, 3 o'clock. I was actually surprised, but we made it to 5:30, and then he woke up and he was up. Not that 5:30 is horrible, right? But I was up a little bit before that, so yeah, that was like my I wake up and then I'm gonna go back to sleep time, and yeah, he ruined that for me. So yeah, we're on cup number two. I wouldn't say the cup number two is blazing great right now, but yeah. Anyway, yeah. So big number in crude oil this morning, right? I love this. Yen enters a new downfall. Really, really. Mester repeats, saw a good case for 50 basis points at the last meeting. Won't prejudge. We're gonna have to do a little more on rate hikes. Yeah. So here's the data today. Here, let's get all the drama out and just get right to the skinny of it. There we go. Core PCE. The expectation was zero point 0.4, came in at 0.6, and the previous they made an adjustment higher. So yeah, we'd seen it up lately. I was kind of going for like, hey, listen, I'd really like to see a little bit of a disappointment, but I'll tell you right now, European markets, they were moving to the downside in anticipation for this. So, this just goes back to one of those, one of those beliefs that sometimes the data gets out early. And if you look at the move today, it's really hard to disagree with this one, that people didn't know what the data was going to be, right? When you look at it. So we'll show it to you. There was no pullbacks. It was just, man, it was hammered down, straight down, and it continued to move. So right now, in the last 24 hours, there's not, it doesn't look like there's a ton. But I mean, again, the dollar CAD being up 110, yeah, big. Dollar yen, again, remember, the yen's entering a new downfall, right? 102. So yeah, that's up. And then you see in the euro dollar, pound dollar, when, the euro is calling back about 86. I'm sorry, about 28 cents. So yeah, it's yeah, it's a little crazy. Anyway, this is interesting. I just saw this a little while ago. Preparing ground to announce a new Brexit deal. So, God knows what's coming from that. That'll be interesting. So, telling us what's going to happen to money. But yeah, so we'll see what home sales is. Again, that comes in at 10 o'clock today. It's expected to be, it may be a little disappointing on this one, but I don't think it'll be, excuse me, a major mover. Consumer sentiment, again, I don't think it's going to be as big. Maybe we'll get some more G20 meetings comments. We'll probably get some more comments on the Fed as well, but all eyes are going to be on this zero point 0.6. Again, core PCE price index on a monthly basis. They keep saying things are working. They're starting to slow down, but this once again shows an acceleration. Yeah, it's hard to say it's not, but it's an acceleration. Maybe things are a little bit better. And again, energy was one of the big problems before, but energy is not as much of a problem now because we've had surplus, 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 surplus. So yeah, yeah, kind of a weird scenario, right? Is what it is. So anyway, tomorrow again there will be G20. Obviously, there's nothing to trade tomorrow, but keep an eye out on headlines over there. Sunday night, right at the open, we have retail sales on a quarterly basis for New Zealand. So for those of you that like to get in quick, there is retail sales data that's coming out for Fast and Furious, considered a medium impact because again, retail sales is a big one for New Zealand right at the open. So we got that news coming out Sunday, and then Monday morning. Again, it says late. It says late at night. We have BOJ speaking, but on Monday morning, again, we got some durable good orders in there. Again, this is that manufacturing side, and it's the durable goods on a monthly basis, not the core, but the durable, trying to be negative. So, yeah, I mean, overall, today with the data that we got, it's not surprising that all the indices are quite in the red. We were looking for a feel good Friday. The way the markets look like they were yesterday morning at least. They looked like they were going towards a dollar softening, um, and they did a little bit, right? And then they kind of reversed on us, and then just in the overnight, just got hammered. I mean, looking at the dollar. So this is where we were. Where we at? Where we at? Oh, that's why I'm like, why is this so off? Um, Wait, who the heck just sent me a message? I have way too many browsers up, and all of a sudden you hear this ba-bing. Hold on one sec. Let me make sure that wasn't Melissa's homesick, so I'm like juggling. Oh, okay, it's one of my parents. His parent sends me like a good morning thing every day. Sometimes I see it, sometimes I don't. Um, um, Hold on, let me close this down real quick. Where is it? There you go. All right. So yesterday morning, we were sitting up in this area and we talked about, we're seeing a little bit of little bit of weakness going into this. And then all of a sudden at that 10:30 mark, we started to get the pop and then it started the base. And again, a standard Harry Potter type trade, we saw a break of it this morning and pulled back to that zone. And it's like, oh, this is a long trade. And then it took off. And again, European market open. Let me just make sure we put this off here correctly. Right there. Right. You can see we had the little pullback, and then at 5:30, off to the races. 8 o'clock, we paused a little bit, and they continued to move, and now we're pulling back a little bit. So, this is one of those ones that 75 cents is one entire day's worth of movement in 6 hours. So, kind of a lot. Is it justified? Yes. I would say it absolutely is justified. So, overall, indices wise, they're not looking great today. Maybe we can get some type of a rally at the end of the day. When the profit taking all comes in. Overall, though, gotta say, I mean, core PCE, nobody knew what the heck it was until inflation started to be a problem, and that is a big number, and it's increasing in the wrong direction. Everybody was like, "Oh, it's working. We're almost there. We're gonna hold," but it's more than what they expected. So there's every reason that this is going to be a point 0.5 next time, and maybe it's another point 0.5. We thought it was going to be a point 0.5, 0.25, or maybe 0.25, 0.25, but at this point, I think the cup probably pushing over into that point 0.5 again. And yeah, look to see where that's going to take current rates. So I don't know. Maybe Bullard's got to figure it out. Maybe it's one more raise and they are done. But right now, I mean, the data is looking like it's going to continue to go higher. So obviously, indices in the red to start off this morning. Commodities, for the most part, minus natural gas. The natural gas gurus knew that I was, targeting 2, and it came down and hit 2, and now it's off to the races. We're back up at 250. Like, we cannot give him the peace of mind to know that we ended the week at 2. We gave him the hit, and that's it. Now, interestingly enough, gold and silver, again, getting smoked. Silver down 2%. Zero surprise whatsoever with the news. Again, remember, if we would have paused, that means that inflation could, we'd not be in the crushing stage. This just shows we're in the crushing stage again. And again, silver, we're down here at below 21 now. We've cleared that 22 all the way down to the 21 mark. So, kind of a little bit of a run there, right? So kind of a little bit of a run. Currencies. All right, so currencies. We're going to have a difficult time. There's probably going to be a bit of a retracement today. But overall, the data today kind of feeds into this big drop. So I think it's important to kind of note where all this started. And again, here, right there, is the European Open. So you can see we pushed down, got a little bit of a kickback. We had a target yesterday talking about price coming down to 67.66. We drove through it, and now we're all the way down here. So question is, do we have a reversal? We are at a reversal area. We talked about this yesterday, being an area where, again, it's where we had a test. We had a nice little pullback and a strong push off of it, and we touched it again and took off out of it again. So, it has all the makings of things that we like. Now, the data just came out, right? Couple ways to play this. You could wait on a smaller you can go down to a lower time frame and say, okay, you know what? The data's in, right? The data's in, right? We could either wait for the confirmation with a green, red, green. We could take it as a number 3 entry on the way back out again. If it continues to collapse and fall, guess what? No harm, no foul. You haven't gotten into the position. So, I would say that there's, yeah, look, you can see we've kind of hit it once on the 5-minute and pushed deep. Right now there's a green, but now there's a red lower. So we don't have a confirmation yet. We'll see. It may hold, it may not hold. Everybody and their brother right now is still trying to short, right? Or actually trying to go long the dollar, right? Everybody's trying to go long the dollar, which again makes sense. But remember, all the people that were selling over here, they're going to be looking to buy it back to take profit off, right? Because when you sell, you have to buy to take profit. From the European Open, we've already moved 90 pips. The daily ATR is 83. So again, we've moved an entire day's worth of movement in 6 hours based off of that news. I don't know if this is going to be the exact bottom, but I will tell you right now, there will be a bottom. There will be some profit taking. We will probably pop back up again. Question is this going to be the bottom? So it is a tested level. We know there's buyers sitting down there. I would take this, drop it down low. And again, if you want to wait, there's two ways to take it. You could wait for a Harry Potter, wait for it to come back up again, right? And again, Harry Potter meaning not a continuation, but just a kind of like a confirmation pattern. Look for something along those lines, and then you pull the trigger. Now, it's only 10 pips risk, so it's not a lot of risk in there. But again, you want to be very careful. That should have been a profit target from the news. And again, that's what it did. Maybe it reverses here. Maybe it reverses a little bit farther down. So again, we either wait for a price to rally back up again and then pull back down to the level, and that's where we pull the trigger, or we wait for the green, right? The red and the green, right? I would go there to there, right? Or we wait for that pattern right there. So you could take it either way. I do think it rallies back up again. And again, either one of these two is fine levels to do it. The 67 is sitting down there, so the 66.90 is not bad. But we are at 9:45-ish. We're not quite at reversal time, but we're close. I would say this is probably where it's coming in. Or they're here or about 20 pips lower. So one of these two zones, just wait for one of the confirmations, whether the confirmation pullback failure to go lower or a red, green, red confirmation change on either of those two. Aussie yen. So Aussie yen, it's a little bit whippier, right? So yesterday we were talking about looking for a near-term base. We were looking for some type of a short trade. And we didn't really get it. If you were going to say that there was a short base in here, and again, remember we drew this like, oh, if we can base in here, that would be pretty decent. We didn't get a base. It drove all the way down, then came back up again. So doesn't really qualify. You can see that it was, again, a little bit deep on a 23.6. I mean, it did hit. There was the initial hit here, and then it came all the way back down again, and then went all the way back up again. So maybe you can call the 23 in there, but overall, this turned out to be a pretty sloppy trade. It hasn't changed too much. It came down. It tagged all our profit targets. I would say right now, I think this level up top is still probably a decent level. And you can see now, again, yesterday we were sitting over here. Now that we drive this down, you can see we're in close proximity to that 50% retracement level. So, I think we still got to look out for that. I leave that on there for next week, the 92.20. As far as where we go with this now, I think a lot of it's going to depend on what happens with the Aussie dollar. Again, you can see the whipsaws back and forth are pretty violent. I don't think this level down here holds. I don't see a long here opportunity that I'm loving because we know that we have this a little hiccup below. And again, maybe that's what it looks like. Right now, there's not enough basing. We do have the 3 hits, so I would be looking more for a short, not a long. If I was going to mark this off as like where I would pull the trigger on a short, probably there. How much risk is that? Yeah, it's only 9, and there is a little bit of a little base right here, this rally base, and then pop, and then it touched it. So, if it comes down and bases in here, I think there could be a decent short here. But again, we still need a little bit more help with it. We got to see the correct pattern on that one. But again, with 3 touches in close succession and knowing that area has been touched before, I think this is more of a downside trade. Yeah, I mean, it's got to get 25. So the risk on this one for me right now is more of a time thing than anything else. Only because it's Friday, we don't have as much room, right? Time-wise, right? We're going to run out of time rather soon. Not rather soon, like in the next hour, but like obviously the market kind of dries up sooner rather than later. All right. Yeah. So that's the only thing I got on this one. Like I said, I like this trade. I almost kind of want this trade to I really let's put it 91. We're just gonna do 91, 191 or 91 flat. I really I kind of want this one not to trigger today. Okay, it's right there. Oh, God, I kind of want this one to hold. I know I don't have any control over it, but I'm like, man, if we can get over to there and kind of gap down here, and then God, if we could end there, that would be phenomenal. If we could end there, gap lower, and then pull back, and then pull the trigger on a short on that one, oof. I could like that one. I could really be into that one. I'm gonna set an alert. It's not gonna matter on the thing. No, I don't need to set an alert on it. It's gonna have to be a Sunday thing. God, I do like this one. To me, this is a Sunday night based trade. Yeah, it's right there. If we can open lower than this, then pull back. It's just a continuation. It's a standard gap play. So I like that one. Hopefully it doesn't screw it up today. I'm just afraid it won't have enough time today to hit a full profit target. Now again, if it does trigger, right? If it does trigger in that time frame, there's a couple hours left. If you wanted to take a short, great, but I don't recommend holding it over the weekend. I'll see. Euro dollar. So euro dollar, we're trailing down. So euro dollar. Um, and this is where I was joking earlier about it's hard to make a case for this one. There's a 3 o'clock window right there. What has it done in the European session? We had a little bit of a pullback, right? We did this little kind of 530 saying, oh, the 530 pulled back. But from the open, 60 pips. So again, two ATRs in that time frame. For the no, it's not a daily, it's almost. But yeah, look at that. Almost no pullback. Pullback right before the news. Right? There's your pullback before the news. The 8 o'clock candle drove back up again. It's like, oh, what is it doing? Wow, drives right up ahead. Yeah. So again, not really surprised. We know we don't have any levels down here. We're in the middle of a racetrack, so there's not really a long base trade in this one. I'm assuming we probably have a bit more basing in here, but look at the way this is stepping down. I mean, it's going pretty decently. I think this one, if you are short, I think overall you look for target. There will be profit taking coming in. This level just happens to be sitting right here at 105 exactly. 105 is kind of low, right? Kind of low. But again, I think people are going to start talking about that point 0.5 number. So, yeah, yeah. So, yeah, not bad. I like it. Again, I don't think there's going to be a trade today. I don't think you're going to get enough of a pullback into it to really get anywhere that's kind of beneficial. Like I said, it's kind of hard after like a blockbuster news like PCE with the environment they're in. So, for the rest of today, if you're looking for something, I would expect a little bit of a roll back up again. I don't think it's going to be enough to trade. Again, areas where you could potentially take this one short. I mean, there's obviously a little bit of a piece right here. I don't know. Let's see if we get the overnight. Yeah, I mean, it's kind of at the 50. I mean, there may be some people kind of grab it from there, but I wouldn't be surprised if price rallies back up again, up into that 10, what is it, 105.70 level. But be cautious. Like I said, the news just happened. This happens every Friday. These big inflation-based numbers right before Fridays is rough. Euro pound, there's your bounce from yesterday. We talked about the hit. It hit yesterday at about 12 o'clock and then hit again and hit again and hit again. Finally collapsed through. It's not going to hold. It went higher, but we are sitting in a racetrack area right now. Um, Again, this market's only got about an hour left, so there's really not a whole lot we can say with it. I think for next week, get this one ready. Again, 88.78 up top. You look for downside. Again, we're still kind of channeling through this section here. We can adjust this a little bit for the weekend, but again, it's got some hits. So right now we're dealing with this. There's really no reason why it can't go higher. And again, it's just your strength. I think this one will probably be a big mover on Monday. Obviously, this Brexit 2.0 or whatever the heck the new Brexit is, it's like you already left. Is there a non-leaving? Are you rejoining? I mean, then it would have to be called something else besides Brexit. So, yeah, overall, I think this one is able to grind higher based off of what we're hearing, but there's obviously no entry on it. It's too choppy, and then the market only has about an hour left before this one closes for the weekend. So it's going to start drying up and going sideways more than anything else. So just use caution. But as far as homework goes, I think right now two levels to look at for this one, top and bottom, would probably be the 87.92 and the 88.78. I'm sorry, right there, 88.80. Right. All right. There you go. Euro yen. So obviously you had this crazy, crazy spike in there. Now this was an interesting one. So, you know, obviously a proxy type battle here, right? There obviously was a level sitting there, and again, as this is rallying back up again, you could say, hey, there's a level there, and let me show you what it looked like ahead of time. Okay, it wasn't really. I would say it wasn't necessarily a fib-based trade, but when we saw the pause in here and the takeoff, it is actually a trade that you could have traded news-wise. a little dangerous because again, it is a proxy, but it did go to the top side. Again, it was a yen play, so a lot of whipsaw back and forth. Right now, too, I think is a decent point to kind of mention. We had talked about a top over here, right? It's kind of up there. I would expect this to roll over a little bit. Again, just some profit taking, but um, it's kind of past. Like I said, it's long in the tooth. It's purely going to be a proxy play in about an hour, so we're not going to have as much UR resistance in this one. Um, where we are now, like kind of space wise, it's about 33 pips. Can we continue to rally up for another 33 pips? Maybe, maybe, but I think this level up top, the 143.69, is an important number to look at and potentially use for this weekend. Um, eh, I think Sunday to open is what you're looking at for a reversal. Like I said, I think this one is going to start to really, really slow with the European market being fully closed. The yen will have a little bit of a retracement back again. We probably see it pull back down again. But I think looking up here at this 143.96 could be decent, setting up a Monday night trade or even potentially a Sunday night overtrade, right? Like I said, I don't think there's any European. Let me see. Monetary supply. I don't think there's going to be enough on it. I feel like the problem is right now, all the profit taking is coming from the long, right? From the drop back down for the people that grabbed at the 143 level. 1, 2, 3. It's the best thing I got. The 143.96 again on Friday. I hate Fridays. 143 is the best thing we have on this one for a reversal. I think it's more of a Sunday night play than it's going to be a today thing. Again, it is at the extreme range of the zone, so we know that there's sellers up there, and that's about it. And again, this level did get broken through. Again, late last night, it hit it, came back up again, and hit it again. So again, you're 1, you're 2, and this actually broke on 3, which happens, and then it kind of used that as a turning point. So, it was an area. We weren't exact on that one. Again, it kind of turned in the middle of nowhere, so kind of a weird one. But yeah, this is what we're looking at. This is kind of what we're dealing with top and bottom right now for the euro yen. Pound dollar. Look at this. Road. Look at this. Came down. Tagged the profit target. So I mean, this one was out at again yesterday morning. So we'll take this one off. We'll leave this one here, although we gotta be cautious with that. Profit target is grabbed. Again, we're looking for a short through this area, right? You guys remember what I said on this one? It's a big area, but we're looking for a short, right? So we're looking for a short. I also drew this here and said, I don't know where the basing is going to be, but if we can get some near term basing, that could be a level that we are looking to take a Harry Potter. Again, we're already looking to get short. I missed it by a little bit, so I was pretty close to my draw, right? That's where my draw is. There's where your zone is. So I got pretty close, right? I got pretty close. Here's news, right? And we said that, again, Harry Potters are, you got to be cautious. They're not really used, but if it pulls back into a Harry Potter, then that's a little different. Guess what it did? The 8 o'clock candle pulled right back up into that Harry Potter level. And again, it's only Harry Potter because they're looking for it over here. This is a standard base drop and a pullback. That's all that it is. So it was still, again, it was a Harry Potter because of this side. But if you were not looking back through, if you're only looking at the near term, again, it's a base drop and you're looking for pullbacks in those levels. So again, kind of two strategies combining. Unfortunately, the trade is obviously out at this point. But again, I got pretty cloose. I was pretty proud of this one. I was like, look at that. I got really, really close. I was like, I know it's going to base somewhere in here. And look how close it was, right? I originally drew a 7 pip zone, which again is a little bit small. It turned out that it was a 7.7. So I got really close. And then it pushed down. So, we've obviously driven much, much lower on this. Again, you would look to see where the last turning point was and confirmation. It's right there. And that's exactly what we bounced off of. So we can remove this. Yeah, I mean, right now, this was where you would like to see it turn. I mean, that's would have been your profit target for the short because that's the next opposing zone with a confirmation. So, you can see it is turning and reversing off of that as you'd expect as well. Is there a continued trade in this one? I don't know. I think it probably kicks down and probably slows down here. Like I said, they'll be profit taking for the dollar, but the pound's pretty much done. I'm really curious to see what this new Brexit release is. I think the new Brexit release could provide some, again, if they're adding something new that could be positive, I kind of, I don't know, the way that it ended, I don't know how they could add more negative Brexit stuff on there, so, I don't know, I kinda feel that this is probably a good thing for the pound, that the market I mean, hopefully, the market likes it. Like, yeah, this is a step in the right direction for the pound. With it being lower on the curve right here, I feel like there could be a potential long in this one. So, I mean, we'll take a lot of these profit targets and things off from this week. And again, this is an old one. We've hit it 3. We'll leave it, but again, it's kind of risky at this point. Obviously, the 61.8, because again, if we're still using this as a bottom, the 61.8 held last time. We got to mark that one off. Again, the Harry Potter, again, missed it by point 0.7. My drawing of saying, if it bases somewhere around here, and it did, it based almost exactly on. Um, we're out now, but I think we kind of see what this does. See if we can get a true bottom here with a confirmation. And I think this could be a long on Sunday night. I'm pretty happy with that one. And again, I do expect it to kind of rally back up again, but I wouldn't be taking this zone again. It's already kind of got a continuation hit off of it. So be cautious with it. But I think right now, going to the weekend, I think we look for pound dollar strength. Obviously, overall, the dollar is going to be a stronger currency pair. But I have a feeling that they're going to come up with something big for Brexit. And again, it's either going to be a big up or a big down. It's either going to be a love it or hate it. It's not going to be like a neutral thing. Um, I don't know. I guess it's the first big thing that. How do you say? I think it's Sunak. I think is his name. I think I could be mispronouncing, but I think it's Sunak is how you say it. Again, a lot of people like him, and he's pretty aggressive with things. It hinges on a couple things, et cetera, et cetera. So I think it could be good. Again, he was spoken of very, very highly. People really liked him. So I don't know. I mean, if you want to make a splash, here you go. Give something good to the pound that could bring that strength back in again. So again, we're kind of combining a couple factors here. So, but we'll see where the rest of the bottom is. But hopefully, you guys are able to grab this one. Again, this is one of those things about Friday right after news. Nice trade setup, but not much I can do with it now. Pound yen. So pound yen came down. Look at the choppiness. We were talking about being down here at the 61 level. As you can see, this one did kind of whip around. Here, I'll move this out of the way. You can see that we hit and we bounce and we hit it again. So it's kind of like, oh, we've hit it a few times. And again, the 61.8 traders kind of went down to the 78.6. It was a big level. And again, as far as a proxy goes, this was late last night. And again, more of a yen play. Here's the news today. Again, it whipped back down. I don't think it actually went to a level. No, it didn't. It was kind of in the middle, right? It was kind of in the middle, right? Let's put this over here so you can kind of see it. There, so it's not, didn't really line up. It's still on Brexit. Huh? What's still on Brexit? That guy? Yeah, I mean, it's a big deal. Like I said, paved the way. So again, this was that last night trade. The profit target is what we put in here. You can see the first time it hit it at noon yesterday, it bounced right off the profit target. So overall, that's what we're looking for. We're looking for a good confirmation. And when we talk about this, we have a red, we have a green. We got a red that didn't really close above the green, and then the red blew it up. Right there's a green. The red closed lower. It wasn't there. There's your green. There's your red that didn't close lower, and bam, there's your green candle. Now it did pull back a little bit. But then you can see the takeoff in the other direction. So again, when you see the big green candles, that's kind of a pain because it's like, oh, there's a confirmation, but it's already gone. You're like, wah, 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 too far. And again, doing it on the 30-minute is a little bit big. You do it on lower time frames, you tend to see more. So where we are with the pound yen. I like where we are with the pound yen. I'm going to delete a lot of these just so we can get them off for next week. We're at a level right now. There are obviously some sellers up here. We'll see if the pound slows down. Right now, obviously, the yen is imploding. The yen will kind of kick back a little bit. And the big question is with the yen kind of getting kicked around today, we do have the BOE, excuse me, the BOE Gov elect or designate or whatever, speaking on Monday night. So, I think we got profit taking in the yen. Is it going to be big enough and movement enough for the rest of the today? Probably not. I wouldn't be surprised, though, if that Brexit data is good, we should be able to blow through the top and get back up into this 64 to even potentially 65 range. If it's good pound data. Because like I said, I don't think the yen is great, but again, if it is something as monumental as Brexit and it's good and people love it, can the pound yen jump 200 pips? Yeah, absolutely. Without a doubt. 100%. The daily ATR is 164, so that's nothing. 200 pips is right here. Right? There's 230 pips, right? If we do 1.5 ATRs, you're talking about what? 240-ish? You're talking right there. We can absolutely, and this is 165, right? 165 is right there. It's 227 pips. So yeah, Yeah, so we're in that range. I think 164, 165 could be a big target on Monday. So we'll see. We got to get through. And again, if we open above and gap, this could be a Sunday night trade long, right? If we gap above 163 or 4, look for a pullback and pull the trigger and take that sucker long, right? Again, this is next week, not today. Next week, not today. Something along those lines right there. Is it really just only my Twitch randomly freezing? I think it is. I don't know. I'm looking at a restream and it's not frozen. Yeah, it's still moving. I think it's you. I don't know. Do you guys have like super cold, freezing weather there again? I don't know. It was like super nice yesterday, like 60 something. I think the high today is supposed to be 57. The high tomorrow is 37. So yeah, I'm not looking forward to tomorrow. Yours was yesterday. It could. Yeah. I mean, I don't know. It's Twitch. So that's where we got dollar CAD. All right. So how's that for dollar CAD? So it was taken off. You can see a little bit of a Harry Potter in the overnight, came back down again and just rallied. The big spike came in obviously where we thought. And again, there was kind of the reversal that we had marked off. We talked about this level being a big, again, well, it's supposed to be to there, but we knew that we had a couple levels up top. This is where the last, actually, there is where the last, I don't know why I moved that one. There you go. So kind of turned. We talked about if we had a parabolic move up here, look for a reversal. You can see that it's starting to kick in right now as people are reversing it back again and with the CAD. Obviously, with oil being down, it doesn't necessarily help the CAD. We kind of needed a little bit more strength in there, so that always hurts. If oil was strong today, this would be a much bigger retracement back down. Overall, I think this one probably has issues with 136, which is sitting right there. That's kind of the start of the move before news. I would expect it to push right back down to that. Again, this was the origin of the move. I think a lot of people prepared for that one. But you can see, as of last night, nobody was fooled. Here was the 3 o'clock, the 5:30 pulled back, the 5:30 took off, and then we literally just went crazy. So this is I feel like people knew ahead of time, right? There was not even a slowdown. It's like, yeah. 8:30 gets out, and the retail trader's like, holy crap, go long the dollar CAD because the dollar is strong. And that's why we're seeing the retracement back down. So it probably maintains and stays high. We'll see if we can get a little help out of the CAD. But again, there was the level we talked about for the parabolic retracement move. And it's about halfway through. I think, let's see. Let's just pull that off. How much? Let's see. From that level back to the origin, it's 57 pips. It's not bad. Right? It's not bad. I don't even know. Let's see. 1 to 3 is only right there. So that's not even that far of a push. But if you did get short from this level looking for that parabolic retracement, again, you should move your stop loss to break even, bank a few pips at the most, or at the worst, and then let this puppy ride. But don't hold it over the weekend. Close it down before the weekend if it doesn't take you out on profit already. There you go. And again, look at this, right? The initial, the surge was down during that time, right? And then at 5:30, they were like, nope, up. And we talked about 94, being able to tag 94. So pull all those off, and look where we are with it, 94. We're close. We made it to 90, 93, 96. So 4 pips, right? 4 pips. And again, we're sitting very, very high in the curve. I think that's fine. I think there'll be some more headlines. Again, this one busted out, so we can get rid of that. You can see yesterday, boom, right? Hit its profit target. Base, went up, came back, and then grabbed it late last night. And then late last night, it grabbed it. So again, a little Harry Potter action here. We knew there was a lot of chop over here, right? But yeah. Let's take it. Let's run some fibs. All right. We can pull this guy now. So right now, and again, I'm going to use the 94 right now. That's probably, again, I think for next week, I think if this holds and we start to tear back down again, which we probably should. How much movement was this? From the 130, it doesn't matter. Yeah, it's almost a daily ATR since that time. So yeah, we should see it roll back down again, which should give us a top in here. I don't know where the top is going to be, but if we do have that top in there, I think that gives us brackets for next week. Right now, levels that I think that are important to look at. Again, there is basing here, and again, you kind of got that confirmation touch right there. Um, I think those are the two levels you look for, right, as potential long areas. Right. One of them just happens to be, again, a level base with a touch right at the 23.6. Small level here, although pushed pretty deep. And then the next time we had basing with a touch with a big green candle, just happens to be at the 50. So those are two levels next week. Mark off those dollar Swiss levels for next week. Keep them on your radar. Dollar yen, again, dollar yen is just imploding. You can see though. Look at the 8:30 candle. Here, I'll go down to the 15 minutes. So you guys can see this one. There's your 8:30 candle. Right? It was like, oh god, and then took off. And it's funny because if you're like, oh, here's the top of that level. If we can Harry Potter, yes, we went up and we had kind of a triangle and it came down and took off. So, yeah, I mean, we're over 136 now. So, kind of a hard, whoops, I didn't want to take that. If we want to adjust this, we can adjust the most recent low to high. And that's kind of what we're looking at. You can see the base, if we adjust it, and the touch is kind of sitting right there between the 50 and 61.8. So, yeah, I mean, again, this move started yesterday, right at midnight, and it never even slowed down. It pulled back just a little bit at 5:30 to take some profit for the basically the Asian session profit, and then it took off, and then it's like the European session profit, and then that's the U.S. session. I think it's high. I think we probably got to roll up here, but I don't really necessarily want to mess with the dollar yen. Not on a Friday, right? Not on a Friday, but I would assume that it does pull back down again. If you did get short somehow at the top, again, look for 135.89. You know, you're gonna have people step in there at the 23.6, and there is a little bit of a base there. It's not great, but again, it's Friday. It's gonna be a proxy play all day. Looking at oil, right? Oil, again, having problems. We drew this yesterday. I'll just push it across, right? It's a level up here. Wasn't quite at the 50. And again, if you didn't want to use that, if you want to do a failure to go higher, I mean, you could say, look, there's a short, right? It pushed back down again. If we use that level of risk, you can see that it took off and deteriorated to the downside. So it continued to go up all day yesterday, right? Obviously, some chop back and forth with the news, but all it went up to, and again, this drop is the other reason why that I feel like the data was kind of leaked, and I feel like people knew what the data was. And you may say, well, why is that? This is oil, right? I mean, if there's inflation, isn't that over here too? No, not really, and here's why. Again, the commodities market, if you look at what the data was today, if you like analyze the data just a little bit more, right? I guess I got to look at all of them. Non-US. Do you see these two things right here? Okay. Personal income, right? The change in the total of income received from all sources of customers. That was expected to be 1.0. Now, there was a little bit of adjustment up 0.3, right? It was 0.2 last time, and they adjusted a little bit higher. They were expecting a 0.1 and how much money people were making. It was positive, but it was quite a substantial difference for what it was over the month before. It was a lot less than what the market had expected. Now, it's only a yellow thing, right? You may say, okay, what does that have to do with anything? Well, look at personal spending. So people are making less than expected and spending more than expected. Again, we already know what credit card debt looked like. And this goes back to the consumers have been resilient. They've been resilient. Well, they're also not making as much. When the spending starts to outpace the income, that's where you start to see some things, right? Now, the sentiment came in as good, which is fine. Because again, if people are not feeling good, they do not spend money. But I'm wondering, right? And I'll tell you what this well. What I'm wondering is if everybody's like, oh, it's gonna be a soft bottom, there's gonna be no bottom. Yay! We can just keep spending, everything's good, right? Not realizing that it is a very real scenario that, again, inflation is continuing to rise. They need to keep raising interest rates, that there could be a bottom and there could be a big crash, right? That's still a possibility. It's not off the table yet. But it's nice that the market is really thinking about that. And it's kind of like, has the general public now gotten in is the hopium real, right? I mean, Mester, the PCE report shows that the Fed needs to do a little more, right? We haven't done enough. We need to do more. There's a breaking point at some point, right? And the question is, are people still spending because they're reading in the news that it's going to be a soft bottom, even though they're not? And again, Are they spending more because they thought they were getting more, right? That's kind of is the market factoring this in. So very crucial. Now, what does it have to do with oil? The oil market is not fooled. Knowing that data ahead of time would have led people, oh God, we're going to be in for it. There's going to be a bit more of a recession. There's going to be more layoffs and all that kinds of stuff. That also sends this down. Okay. It's also a big deal. Um, that's why, again, when oil happens to match what you see the dollar doing, yes, some of it is a dollar play. Yes, I got that. But it also comes down to demand at the end of the day, right? So not great. Now, natural gas, on the other hand, all right, little Harry Potter action in there, right? We ended up gapping past the zone that we were talking about using the 78.6, right? And I was like, this one's not horrible. It's kind of in the middle, right? We got past it. And it was like, oh, geez. And what did it do? It pulled back down again, grabbed it at the 242, and then we took off this morning. So who knows what's going on with natural gas? It could literally be the forecast that it's like, wait a second, it's going to be 37 degrees. Wait, how much? 37? Right? It's probably the realization of that. I think in a week when this passes, I think it goes back down again. I think a lot of this comes back down to the fact that people are going to be like, holy crap, we're turning the heat back on. And again, some of it may have to do with the G20 and what they're talking about over the G20 that, kind of the barbs being traded back and forth. But I think a lot of it has to do with the kind of the near-term weather situation. I do think it comes back down again. 250. I expected it was going to probably be like 225 and close over here for the weekend. After I saw the bounce, I'm like, yeah, it's not going to stay down low, too long. It'll probably fluctuate somewhere over here. We are a little bit higher. I didn't anticipate the gap on this one, so I would expect it to roll back down again. I would say that we're probably very high in the curve. Again, you can see that we do have a bunch of areas, and again, I'll mark this. This is not a zone, but sellers, 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 and a nice push down. That's kind of what we're running into. So just keep it on your radar. It's like I said, on a Friday, remember this market does close earlier than the overall stock market, so it will start to flatline. So there's not really a trading opportunity for today. But next week, I would say again, probably some short opportunity. And remember, we're shooting for 2 this week, so we hit it. I'd have liked to close at 2, but we did hit the 2 this week when we were talking about that last week. Now, gold, straight down. We had a little bit of a pullback. And again, the session started with pushing it higher, and then at 5:30, it's like, nope, nope. And it went straight down. So I do believe that, again, I feel like people knew what the data was going to be, right? Too much central bank movement in the European session to tell me otherwise. Overall, I think gold has a target now. And again, we talked about the yesterday, the target down here at 1800. I'm still going to stand by that. And again, if this was your other base down here with a confirmation, you can see 1, 2, 3, and boom, 4 went through it. So on a technical basis, we're expecting that to drop. I think we get down to 1800, and then maybe we have the opportunity for a bounce. But right now, again, people spending, people making less, and inflation continuing to rise. Not the greatest scenario for gold. Silver, silver also tanked, and again, same thing. It rallied up till 5:30, and then all of a sudden, boom, just collapsed. It went all the way through the 21. You can see that it did chop. I'll remove these off. You guys can see the chop that 21 caused, right? Boom, 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 boom. Finally broke, and then tried again, and then boom, it went back down again. I'm wondering if 21 is going to be the new 22, right? It could be, right? It could be. And if we take the most recent kind of high to low, you can see right now, if we do push back up again, where are we at? Right at 2109 is the last level of base, and we had to drop a base, and that's where the news came in. So right now, it doesn't seem like it's a good place to be, is in silver. Again, the silver and gold market, being a futures contract, does close earlier as well. So just be aware that that one only has 3 hours. I think it's 1:30. Again, that doesn't have a full market day either. But we talked about yesterday. Again, being short, particularly with what we had seen, and you saw this is kind of the rally up, right? It rallied up until late last night, and then in the overnight, they're like, nope, nope, going short. And yeah, the only pullback we got was a little 5:30 and a little bit of a chop right here where they tried to kind of find those new sellers, and then boom, they blew through 21. So kind of a rough day for silver. Now, indices, again, going into the whole thing, there was literally no pause whatsoever. We talk about opening prints. Today, obviously, does not really qualify for opening print because we had such big news ahead of time. You can see this one drove down. Now, it did not drive into a zone. Kind of a little bit of a close one. We're not using that for 15-minute. Another thing that just kind of led me to believe that, I think people knew what this was, right? Drove down. There was not even a pause. There's no pullback. It was like, nah, we're getting short over here. And then at the open, you can see 845. Your 915 is right here. And absolutely, you would have expected this to go short. It didn't pull back into a zone. There's no confirmations because literally the market was straight down. And again, something as big as core PCE is not what you really want to see when you're trying to trade an opening print strategy an hour before. because the data was bad enough that you would expect this to be nothing but down again. I am surprised that it. I mean, again, it did pop up a little bit, literally just to trap those people that were trying to short at the open. But again, the smart traders would have looked at this one and said, "Hey, once you break through, we're going." And again, it's going down. Overall, today it should be it should end as a red day. The data is again, we know that the stock market does just not believe that the Fed's going to raise interest rates ever again, but it's really hard to justify this data. And then the comments that we're seeing to, turn around. Maybe we find world peace in the next 3 hours, and then we get a feel good Friday and a rally. And again, there can still be a rally at the end of the day. Trying to end on more of a positive note. But that doesn't mean that it's going to end up turning green for the day. I mean, I guess it could, but overall, if people are actually going to look at the data and accept the data, the answer is no. NQ, right? NQ looks exactly the same. You can see the big drop down again. And this one did. Look, it did give us a pullback before the news a little bit, kind of that like 6:30 up. And then again, the 8:15 was actually a green candle up, kind of pulling back into that zone. It looks very, very similar. It was nothing but a straight down day today, and that's what the expectation would have had to been on it. You can see this one here, touch, and then entered over here. So again, we're looking for that short. Unfortunately, it never pulled back here. It just had to do it over here. So let's see where other people are going to be selling this one at. You can see there. Look at the technicality of this one at the open, right? Huge push down, right? If I did, and again, some people will grab this zone. Some people will grab this zone. This is the thing about fibs, right? If you talk about the most recent, this is kind of the high on the chart, but this is really, again, this was in an uptrend, and then this is kind of where the trend started. You can see the 23.6 hit, not really any kind of, again, level of risk there. Could have shorted this one. Just goes to show you how technical a futures market can be, particularly when it's jacked around news. So it did pull up. It did continue to push lower. And again, I'm on board. I think this one is obviously going to stay negative. It deserves to be negative today with that news. If you're going to truly believe what the news says, it should be red. And again, here, same thing. Funny that 10 o'clock came back. 10 o'clock's like, no, give us some help. And it did the same thing. Spiked a little bit higher. Let's see. Did this one... That's from yesterday. Let's take that off. Let's pull that down. All right, let's do. Technically, it's there. Oh wait, which one's 8:30? 8:30's there. So nah, this one wouldn't have triggered. If you use this one, maybe. I mean, this is like fibs. Like, oh, if you can use here, you can use here, you can use here, you can use here. Oh, there, that's the one I used. That candle. That was it, right? Nah, I mean, you're gonna use one of these two highs. This is the high, but this is kind of where the most recent trend starts because this was a trend break. So it kind of starts there. So again, you can see it never really pulled back. If this is the bottom now there's, I don't like that the red candle is higher than the green, but arguably you could say that there is probably some type of selling for fib traders coming in at that level now, somewhere in that 32,800 range. See, where's YM? Yeah, we're playing with that. That's what I was wondering. I was like, I wonder if there's a zone right here. Yeah, that's a zone with a confirmation. Yeah, we just broke through it. That's where that initial push came from. That's where that green candle came from. I was like, kind of weird. We shouldn't have that there, but we did. God, where's this one stop? Here's the problem right now. We don't have any buyers in this one officially till 32,444. So another 200 points lower. Yeah. It's kind of a hard thing there because 200 points lower puts us down at like 700 points. I mean, 500 points is a big day down, but 700 points, I don't know. Maybe we can rally back a little. Maybe we can rally back a little bit. But overall, it should be negative. I don't know. Maybe they found world peace, right? Russell, look at the same thing. Right, so we talked about this, came back down, and you can see it's funny enough. It tried to use this one. Look at the whip in this one, though. And again, Russell's always more dangerous when you have risk, some type of risky news release. Did Russell? Let's see. Maybe Russell can have put a fib. Let's see. To there, yeah. Russell could have done it. Maybe it was sloppy. Maybe. Let's go down to a 5 and let's see if it would have helped them. To there. I think it would have got front run. It was close. Yeah, I guess it touched, right? It would have been a 23 on there. Again, kind of in a zone that we had talked about, right? Zone is kind of right there, right? Some basing in there. So it's close. It's close. There could have been some shorts here. So yeah, so maybe somebody got some play out of the Russell today with that 23. Once it went down to here, again, a little bit riskier. Eh, maybe somebody got something. Again, it's not an opening print strategy, so I mean, I'm not counting it. But maybe some fib guys were able to get that one. Again, pretty dangerous, right? You may or may not have gotten in on those, and again, a little scary, right? A little scary, but predictable. Predictable. Yeah, the 930 was up. Look, 930 was up because everybody was trying to short, and then it collapsed, and then everybody that missed it to try to go short got stopped out again on the, and then it went down back down again. So, eh, some ugliness in the indices. But overall, I mean, they're all looking exactly as they should right now. Um, Let's see this natural gas come down a little bit more. But yeah, this is some scary data, right? Again, personal spending. People are spending a lot more. The last time was higher. They're spending more now, and they're making less than what everybody thought they were actually making. And then again, you're seeing the core PCE index. Um, Again, if you're like, I don't know what the heck core is, it's just change of goods and services purchased from consumers, excluding food and energy. 'Cause remember, they blame food and energy everywhere, right? It's because of food costs and gasoline. So, all right. So that's it. Let me go ahead and do the drawing for today. As I said, Friday's always a little bit earlier just because, again, it's Friday. Markets close early. You should be out rather soon. Ooh, look at this one. This will be an easy one today for somebody. Um, no Debbie today. Oh, Kipster. Melissa just brought me Kip, and he's like, but the food left. Bye buds. Bye buds. Here. Oh, here. What's this? You want that? Ooh, what's that? All right. All right. So, see, Ty, this is what I'm talking about. Right, this is what I'm talking about. See, he's playing the game here. All right, winner of today's drawing is. Is there any surprise? No, there's not. He had a 53% chance of winning. The odds were stacked in his favor. Bubba's here. All right, I gotta go deal with the kid. She delivered him. Obviously, she's getting on a phone call, and now he's screaming in the hallway. So, all right. With that said, guys, that's complete. Have fun. Ernest odd. These I had to go grab the kid. So, thank you guys. I'll catch you guys later. Take care. Have a good one.